Welcome back to Crypto Lion. We bring you the latest news about Bitcoin and other cryptocurrencies. You can also watch some sound predictions on this channel. All you have to do is subscribe and turn on your post notifications so that you get updated as soon as we have a new video. So today, we're going to be talking about when Bitcoin will go bullish again. Bitcoin price has been holding ground above the 33,500 and 34,000 support levels. Bitcoin is showing positive signs, but is still struggling to gain momentum above the 35,500 resistance level. It is currently consolidating, with important marks near $35,000. Similarly, most major altcoins are seemingly preparing for the next key move. Ethereum USD is trading well above USD 1020, but it's also facing some resistance near USD 1100 and USD 1120. XRP is still facing a strong selling interest near the 30-cent zone. Bitcoin is in the midst of a bull run, which has seen it shatter its previous all-time high of December 2017. The cryptocurrency broke through the $20,000 barrier at the end of November and continued to rise through December and into the new year, eventually hitting a peak of $42,000. A reminder of the inherent volatility of cryptocurrency happened sometimes recently when Bitcoin promptly lost around 25% of its value, tumbling to about $30,000 before finding some support and recovering to over $35,000. At the time of recording this video, Bitcoin is priced at around $33,000. Crypto hawks will take solace in the currency's healthy recovery, perhaps viewing $30,000 as Bitcoin's new floor. Now, there are a lot of questions about what is driving the crypto bull run, how far it can go, and whether gains are more sustainable than they proved to be 3 years ago. Bitcoin's increase in value in excess of 800% since March last year can be attributed to two broad factors. The first is the wider economic conditions of COVID, lockdowns, restrictions on business activity, and unprecedented levels of central bank financial stimulus to help support companies and keep people employed. The effects this has on currency saw some savers and investors search for safe havens as inflationary hedges. Then comes in Bitcoin, which is now being described as digital gold. Bitcoin is seen by many as a natural diversification tool in investment portfolios due to its separation from mainstream financial markets and fiat currencies. Swiss crypto bank SEBA published research last March predicting that a Bitcoin bull run was on the cards owing to turbulent economic conditions, drawing comparisons with significant increases in gold's value in the aftermath of previous crises like the Black Monday in 1987, the dot-com bubble bursting in 2000, and the global financial crisis of 2008. The research describes Bitcoin, like gold, as a form of outside money that is not owned by any government or central bank and cannot be manipulated as such. The second factor is Bitcoin's latest halving, which took place on 11th of May last year. This saw the reward for adding new transactions to the blockchain diminish from 12.5 Bitcoins to 6.25 Bitcoins. Bitcoin's previous halving in July 2016 was followed shortly after the crypto's historic bull run, which saw its value increase from $900 to just shy of $20,000 in the space of 12 months. Owing to conventional supply and demand, the fewer coins are being generated, the more valuable each one already in existence is. However, comparisons with 2017 are likely to cause some unease for Bitcoin investors, given what happened in the following year. The crypto lost more than 70% of its value in 2018, sinking as low as $3,400 on the 6th of December of that year. Commentators are looking at what comparisons are there to be drawn between the crypto market today compared to the forecast then and how likely it is for such a scenario to repeat. The holy grail for the crypto market is institutional investment. If the deep pockets of large banks and fund, asset, and wealth managers flow into the space, currency will be less thinly traded, which should help to ease the price volatility. This could in turn create more use cases for crypto, with more retailers accepting it as a means of payment, creating a virtuous cycle of more consumers purchasing coins, drawing more institutions to offer trading, brokerage, or custody services, in turn increasing the demand and necessity for regulatory frameworks, thereby driving investment further. Currently, it appears as this is just the start of institutional investment. According to Jeff Curry, Goldman Sachs Global Head of Commodities Research, only 1% of the $700 billion currently invested in Bitcoin is institutional money. Responses from banking giants regarding if they have any plans for crypto brokerage, trading, or custody services remain closed. A Wells Fargo spokesperson had told Finextra Research that while they do not accept crypto assets in deposit, custodial, or other accounts, they will continue to evaluate the underlying technology for potential transactional transparency and settlement innovations it may hold. Wells Fargo is committed to exploring emerging technologies, but as with all emerging technologies, understanding the regulatory environment and ensuring customer privacy and security are foundational elements of this exploration. It seems cryptocurrency remains the wild west of finance for such institutions. This is not helped by news of hundreds of millions of dollars worth of Bitcoin being lost in landfill or disappearing altogether because of the owner not remembering their password. This is where large finance companies looking to gain a first-mover advantage could be vital. Bitcoin enjoyed some level of trust in December when PayPal and Square began allowing their users to buy and sell crypto on their platforms. Payments giant Visa has also been making quiet steps into this space over the last year, offering debit cards that will allow consumers to spend their crypto held on various platforms, including Coinbase and Binance. Visa told Yahoo Finance in November that it's working with some 25 digital currency companies on a variety of Bitcoin-related products and services, cards being just one of those areas. Such offerings by financial services firms with the reach of Visa or PayPal may open the door to other institutions looking for a share of the market to demonstrate their capacity as companies at the forefront of innovation and disruption in the industry. One reason for Bitcoin investors to be optimistic is its relative maturity as an asset compared to 3 years ago. The dramatic decline on 11th of January would have surely set alarm bells ringing, but this is classified as a healthy recovery since this shows that there is increased resilience in the market. This may suggest that those accumulating coins now are more experienced investors, looking to diversify their portfolios with crypto exposure. This makes the asset less prone to wide-scale sell-offs in the event of a pullback, compared to the 2017 bull run, which was more driven by speculation and fear of missing out. This can be confirmed from Google search data. As recently as a month ago, when the crypto was eclipsing its December 2017 peak, searches for Bitcoin were only 20% of what they had been 3 years ago, suggesting that hype and FOMO is less of a factor in this bull run. FOMO investors are more likely to bank profits when the price hits a certain milestone and crucially more prone to panic in the case of a correction, leading to a massive drop similar to that seen in early 2018. Simon Peters, crypto asset analyst at eToro, said that many detractors were quick to believe the Bitcoin bubble had popped, as the price seemed destined to fall below 30,000, but this failed to materialize. He declared victory for the enthusiasts and argued that 30,000 is a new bottom. Peters believes it's too early to say if this is the case though, but that the outlook remains positive. It's likely large-scale investors would have used the dip in price to increase their holdings, taking advantage of the relatively cheaper price. He also noted there will be volatility, which is natural after the gains we've seen, but the long-term trend is clear. Crypto is moving into the mainstream and more investors are adding exposure. And finally, he added that he believes that with this positive momentum, Bitcoin is well on track to hit his price target of $70,000 to $90,000 by Christmas 2021. So when is this bullish run expected? Let's take a look at some important technical analysis. This BTC USD chart shows a huge Bitcoin prediction that I think you would like to know about. On this chart, we can see that the current price is dancing around 33,000. This prediction expects a bull run soon from this position, and the bull is expected to take the price as far as 40,000. It looks like some resistance is expected at around 39,000, which is the end of the long arrow ahead, which has been used to illustrate the bull run. Then it's expected to continue to around 40,000 in a short succession. In the same way, there's likely chance that the price of Bitcoin will drop first before it takes off on that run. The price is probably going to drop to around 31,000, which is the support line. This was drawn by joining some lows and then extending the line to the price mark on the chart. So the support is placed at around 31,000, and then if in any case a drop should occur, the price is expected to bounce off this support and start a bull run up to the 40,000 position. And to answer the question, this is expected to happen in a few days, as you can see from the chart. So this prediction says that there will be a bull run just in some days and Bitcoin will be sitting at around 40,000, which is very close to its current all-time high at around 42,000. One thing we always advise on this channel, however, is the need for you to do your own independent research. This is very important so that you can make the best decisions in your trade or investment based on your position. Bitcoin is a highly volatile commodity and you should not invest with money that you can't afford to lose. We really hope you enjoyed this video and found it informative and hope to see you in a subsequent one. Kindly subscribe to our channel if you have not done so already, and click on that notification bell. Let us know what you think of Bitcoin's prospects in the comments below. Good luck and happy investing!